Imagine waking up one morning and realizing the rules of money have quietly changed. Gold is whispering again, silver is stirring, and this time it might not just be another cycle, it could be the start of something bigger and stranger. Because when ancient assets start moving in modern times, something deeper is rattling beneath the surface. So the question is, why now? Why are gold and silver, relics of the past, suddenly outshining tech stocks and trending charts in the age of AI? Let's rewind. For most of the past decade, gold was the forgotten guest at the party. Tech was the hero. Crypto was the rebellion. Wall Street laughed at anyone still stacking shiny metal like it was 1979. But in the past 2 years, gold prices have hit record highs, crossing levels even seasoned traders didn't see coming. Silver, too, has quietly surged, though with more volatility, the underdog always chasing its golden cousin. Now, the easy explanation you'll hear is inflation, but that's only one layer of a bigger story. A story that ties together trillion-dollar money printing, geopolitical chess, artificial intelligence, and a quiet erosion of trust. So let's start with the obvious. Governments have been printing like never before. When COVID hit, the money taps opened. Central banks pumped in liquidity to prevent economic collapse. But money, just like matter, doesn't disappear. It mutates. And over time, every dollar you print makes every other dollar a little less powerful. That's the uncomfortable math gold loves. Because gold doesn't trust spreadsheets. Gold doesn't have a CEO. Gold never files for bankruptcy. It just sits there, quietly waiting for confidence to crack. And right now, confidence is cracking, one headline at a time. Wars in Europe and the Middle East, trade tensions between the world's two largest economies, supply chains still vulnerable, currencies caught in crossfire. And in the middle of this chaos, countries are quietly pulling physical gold out of Western vaults. Central bank gold buying has surged. Not in decades, centuries have we seen this kind of appetite. In 2023 and 2024, central banks bought more gold than in any other 2-year span on modern record. The buyers? China, India, Turkey, Poland, even small economies trying to hedge their future. Why? Because trust in the dollar is wobbling. For 80 years, the US dollar was the world's anchor, but anchors rust when faith fades. And when US debt crosses $35 trillion with rising interest payments, investors start asking, what's this all worth, really? But something else is equally important, the supply side. Gold mining isn't keeping up. The world's biggest gold mines, many discovered decades ago, are aging out. New discoveries are fewer, smaller, and costlier to exploit. Silver faces a similar crunch, but with an extra twist. It's also an industrial metal. And here's the irony. The very technologies driving the future, solar panels, electric vehicles, the chips that power AI data centers, all need silver, a lot of it. Every AI server farm that comes online quietly eats massive amounts of energy and metal. We're building a digital civilization that's physically anchored in old elements. So yes, even the AI boom has silver fingerprints on it. Meanwhile, the green transition is speeding up demand. The International Energy Agency estimates that renewable tech could eat up a 20th of total silver demand within a decade. Yet global silver supply has been struggling to rise meaningfully. Miners can't scale fast enough. It's not a bubble story, it's physics. But now mix that with politics, sanctions reshaping trade routes, resource nationalism rising. Countries like Mexico and Chile, key silver producers, are tightening control over mining rights. Suddenly, what once seemed abundant starts feeling strategic. And investors, both retail and institutional, love a good story they can hold. Unlike meme stocks or tokens, gold and silver are tangible. You can touch them.
In uncertain times, that physical solidity becomes emotional security. Now, here's the part few talk about, the irony hiding in the data. If gold is a safe haven, why does it rise alongside risky assets sometimes? Because markets aren't just reacting to risk anymore, they're reacting to expectations of risk. That's a psychological loop, and one that gets amplified when algorithms trade on sentiment data faster than humans can read headlines. We live in a financial system increasingly run by code that doesn't sleep, and guess what it watches? Volatility, fear, momentum. These are precisely the conditions that push safe haven assets like gold and silver to spike even before mainstream panic sets in. So when you see gold prices rising before bad news hits front pages, it's not prophecy, it's probability. Machines have already sniffed out the smoke before the fire is visible. But let's not over-romanticize gold either. It's not magic. It doesn't create wealth the way innovation or business growth does. It preserves it, which means when gold shines brightest, it's often because something else is dimming. So, is the gold and silver rush back? The short answer, yes, but the long answer, it's back for reasons that are more structural than speculative. This isn't about investors chasing trends, it's about entire systems adjusting to new realities, a world where trust itself has become a scarce resource. And we're seeing early signals of a shift away from the US-centric financial order. The BRICS nations, Brazil, Russia, India, China, South Africa, are openly exploring settlement systems that bypass the dollar. Some are pushing to back those systems with commodities, including gold. Sound familiar? That's basically Bretton Woods in reverse. If that experiment takes hold, even partially, it creates a self-reinforcing loop, commodity-backed credibility replacing faith-backed finance. That's the kind of shift that happens maybe once in a century, and it doesn't show up in quarterly reports. But not everyone's convinced. Skeptics argue that gold is outdated, slow, and politically inconvenient. Digital currencies, both private crypto and potential government-backed CBDCs, could make gold irrelevant in a traceable, programmable economy. And yet the irony is hard to miss. Many of those new digital systems still rely on precious metals for chips, wiring, and infrastructure. So, no matter how virtual the world becomes, we're still tethered to the physical. Now zoom out for a second. Gold and silver prices aren't just numbers on a chart, they're behavioral signals. They reflect collective unease, the instinct that something in the structure of money, power, and promise is shifting. That's why central banks are hoarding. That's why investors are diversifying. That's why gold has quietly become, once again, the most political metal on Earth. And maybe that's what this rush is really about, not speculation, but preparation. We've come full circle, from the digital future back to the ancient refuge, from trust in systems back to trust in atoms. So, as we inch deeper into this decade, with AI rewriting industries, geopolitics redrawing maps, and climate reshaping resources, the real question isn't how high will gold go? The question is, what are we hedging against? And what happens if this time it's not just inflation or politics, but the system itself that the world stops believing in?